Hey everybody, Rob Maurer here. Welcome back to Tesla Daily. Today we've got a lot to go through, including Tesla removing the capability to order a long-range Model 3 from the US design studio. We've also got an update on Giga Shanghai's production, news on Giga Texas, a couple of new funds buying into Tesla, a new essay written by Elon Musk, and a few other things as well. Alright, so a couple of nice days here for Tesla stock, finishing up 3.1% today to start the week off, closing at $927.96 compared to the NASDAQ up 0.6%. So a significant outperformance from Tesla on the day. Some quick recovery from Elon Musk's sales last week. We are in the part of the quarter now where funds start disclosing their positions from the previous quarter. So it's an opportunity for investors to kind of see what other investors may be doing. And we do have a couple of notable additions of Tesla to a couple of funds. Probably the one getting the most attention just from name recognition would be Soros Fund Management. It's about a $6 billion fund, and in the second quarter they picked up a new position on Tesla. However, only about a $20 million position, so pretty much inconsequential in terms of the weight of the portfolio, but going from nothing to a small position, I guess, counts for something. But setting aside name recognition, the acquisition of more consequence would be from Natixis Portfolio Holdings. They are actually a $28 billion fund or so, and in their recent 13F filing, they disclosed that in the second quarter, they added almost 15 million shares of Tesla, taking the weight of Tesla in their portfolio from just under 2% previously, now to about 38% of their total portfolio at the end of Q2. So a huge portion of their overall investment. Pretty rare to see funds with that heavy of weighting, and that only would have increased, obviously, here in Q3 if they have held that position. That'd be worth over $14 billion today. Now, we don't really know if they intend to hold these long term, but that number of shares would almost replace what Elon has sold so far this year. So definitely a notable investment, the disclosure of which I'm sure has gotten the attention of other portfolio managers here over the last couple of days. All right, I do want to take a quick look at the calendar as well. As I said last week, this should be a little bit quieter of a week in terms of economic reports. We do get the FOMC meeting minutes on Wednesday afternoon, so that might cause a little bit of volatility when those are released. But for the most part, I think we all kind of know what the Fed is talking about, so probably nothing major there, and the next time the Fed meets, most of that stuff is going to be out of date anyway, so shouldn't be too material. A couple of other things to keep an eye on. As expected, last week the House did vote to pass the Inflation Reduction Act, so that will be going to President Biden, who is expected to sign that into law tomorrow. That will carry all the changes to the EV tax credit that we have previously discussed. And then later this week, Elon Musk has said that FSD Beta 10.69, formerly known as FSD Beta 10.13, Elon has said to expect that on August 20th, so on Saturday, and he has said this version is 2 fire emojis. All right, let's get into the Model 3. As I'm sure most are aware by now, Tesla has removed the order capability from the long-range version of the Model 3 from the US design studio. Looks like it's also been disabled for Canada, but does appear to still have some international availability. Elon on Twitter did say that the waitlist is too long, will enable again as we ramp production. I'm not really buying this one. While it is a reasonable explanation, I think if the waitlist truly were too long, Tesla would have stopped taking orders internationally. We already have precedent for what Tesla does in the case of not being able to fulfill all the orders that they have with Model S and Model X, right? They have delivered in the United States starting in California, and they have not delivered in European countries. Furthermore, if we look at some data that was compiled by Piper Sandler, we can see that the Model 3 long-range US wait time has been fairly stable for the past few months. This is a little bit dated data at this point, but we can see that on the red line. It's basically been between 15 and 20 weeks on average, and shorter wait times there than the wait times in Germany. Also shorter wait times than the Model Y long range for the United States. So the explanation here doesn't really fully check out. And remember, this does include Tesla expecting more Model Y production from Shanghai, from Texas, from Fremont probably as well. Tesla CFO Zach Kirkhorn explicitly mentioned that that does factor into the delivery estimates that they are giving. So the decision here definitely seems to be based on something other than just too long of a waitlist, as evidenced by these other longer waitlists that Tesla has maintained taking orders from, and the Model 3 wait time not really changing that much over time. Now, it's possible that Tesla got some random spike in Model 3 long-range orders, but based on the electric vehicle tax credit structure, that one not being eligible, that becomes the least likely to see an order spike. Nothing would really be changing circumstantially to drive an order spike for the Model 3 long range, while for the other vehicles, you might see an order spike because of the potential to lock in pricing before Tesla raises in response to a tax credit. If anything, the order mix, so the percent of orders going towards the Model 3 long range, should probably be declining with this recent news. So that brings me to the rest of the point, which is that I don't think Elon is being completely transparent here when he mentions that the reason for this is the order backlog. I think he's mostly just grabbing the convenient explanation that he has alluded to as a possibility in the past that maybe plays some small role in the decision here, but the timing here is just far too close to the changes in the electric vehicle tax credit. We had already diagnosed the Model 3 long range as an outlier in that system because of the $55,000 price cap on non-SUV, non-truck, non-van vehicles, and now all of a sudden that's the one that gets taken out of the design studio. So it's my pretty strong opinion that Tesla has some other plan here in terms of the production. This doesn't necessarily mean anything really needs to change in the short term. They have still left the Performance Model 3 available for order. Obviously that's going to have higher margins. Tesla can keep producing that. Even more of the orders will probably go towards that with the long range being removed. Maybe Tesla is testing out simplifying and going to that option only. I believe that's what they've been doing in China for a while. And then of course with production, they still have to fulfill all the previous orders that they have taken for the long range version, and that's going to take them some time. What I think we're likely seeing here is just one piece of a multi-part plan that Tesla has to get their lineup of the Model 3 where they want it after this tax credit goes through. Maybe it's as simple as removing the long range version allows Tesla to increase the standard range price without having to run into a really weird pricing dynamic with the long range version. Another thing I could think of is maybe this sets up Tesla to get to a place early next year, middle of next year, where they can take some downtime, maybe retool and rethink the overall lineup for the Model 3. I wouldn't go as far as to say a refresh, but if Tesla did want to take an opportunity to implement a Model 3 with front and rear casting, that could be one reason to take orders offline. Whatever the plan may be, my best guess is that Tesla is thinking about how to get the Model 3 lineup as kind of soon as they can into a place that is, I don't even want to say optimized for the electric vehicle tax credit, but more in a place where it's not just being completely disrupted by that credit, because that's kind of how it sits today. That's a bad experience for customers and kind of a bad experience for Tesla too, because it'll cause a mix shift towards the lower price Model 3s. That can skew the overall program margin. It can skew the overall company margin. That can make it much less attractive to be putting resources into Model 3 when you're getting a lower margin like that. It can just kind of mess everything up is the main point. So I think Tesla here just trying to figure out how to build this back up from scratch, or I guess rather from as much of a clean slate as they can without disrupting things too much, for all of this to be more cohesive with the new tax credit structure. So complicated situation here. Let me know what your best guesses are on this, and hopefully we can kind of put together a most logical conclusion for Tesla to eventually end up at. All right, next up here, we've got a tweet from Elon on Tesla's production. Elon has said, as he has said at the shareholder meeting, that Tesla has crossed 3 million vehicles produced in total worldwide. We've already talked a little bit about that. And in this tweet, he says Shanghai has just crossed 1 million vehicles produced in its history. So sometimes this can give us a little bit of insight into how production is going. In this case, I looked back and through July, Shanghai had produced, according to the CPCA reports, just about 973,800 vehicles. So that would leave about 26,200 more to get to this milestone. Elon tweeted this on August 14th in the US, but by then it would have been August 15th in China. So assuming they hit that milestone on the 14th in China, that would have given them obviously 14 calendar days in August to get to that 26,200 vehicles produced. Now, at the rate that we had calculated for July production of Model Y, which remember was just over 1,700 per day, that would have given Tesla about 24.3 thousand for those 14 days just from Model Y. We know the Model 3 had downtime running through August 7th, so that would have given 7 calendar days for uptime for Model 3. Of course, it needs to ramp up a little bit. That would then only suggest a couple thousand Model 3, even with some inefficiencies due to ramp, probably a little bit less than what we would have expected. Based on the Model Y's re-ramp in July, probably would have expected at least, 3,000 or 4,000 Model 3. Plus, we would also hope that the Model Y production is actually increasing over the July average rate. So the main point here is that the math doesn't really show us anything that is extremely exciting in terms of this production number, unless this photo that Elon is sharing was maybe a few days earlier. Maybe we can somehow figure out exactly when that was. If I can find anything on that, I'll definitely pass that along. But right now, with the information that we collected here, the two conclusions we could reach is, production is maybe a little bit slower than what we would have forecast or hoped for, or, maybe this picture was a little bit earlier. If the math had shown a higher number, then we'd be able to walk away with just one conclusion that, Tesla is ahead of expectations. So hopefully that makes sense why this is an inconclusive data point, but always interesting to go through and see what we can learn from those things. All right, next let's move over to Giga Texas really quickly. We've got an update here from Joe Tegmeyer showing a lot of work being done on Texas, some new equipment seemingly being shipped in, some speculation if maybe this is the 9,000 ton Giga Press from Idra. I don't think this is. We may be getting very close to that period of time though. Remember the timeline that we had walked through, which comes directly from an old video that Idra had. It takes about 2 weeks for Idra to disassemble, maybe longer in this case for the 9,000 ton machine, some time to then get it to port, then depending on congestion, probably 3.5 weeks to ship it to Texas, and then about 1 month to reassemble it at the destination. Again, got to factor in some time there for shipping from the port of entry to that destination. So in total, to even get it to Giga Texas, you're probably looking at maybe 8 weeks or so, and that's under pretty aggressive assumptions, so we're probably not quite there yet. Remember, Idra's open house ended on the 14th of June, but I think they even extended it a little bit, so I think sometime in September is quite a bit more likely. Joe Tagmeyer, though, did say, although he has not visually confirmed any Idra deliveries in quite some time, his sources still tell him that we should start to see deliveries on the 9,000 ton press start this month. All right, next we're talking about an essay that has been written by Elon Musk for the publication China Cyberspace. Now, this has been translated from the Chinese version by a blogger named Yang Liu. So we're talking about a translation of a translation here, just a reminder. There is a section in here on TeslaBot. The rest is kind of stuff we've heard Elon talk about, just really explaining the missions of Tesla, of SpaceX, of Neuralink, things that we all know about. And really the same on the TeslaBot, but there was a part in here that got some more attention because it said, quote, "We plan to launch the first prototype of a humanoid robot this year," end quote. And because of the use of launch there, that might sound a little bit more exciting than what Elon was probably really saying there. Probably just a translation telephone game where Elon was saying they plan to unveil it or something of that nature, rather than what launch would usually imply in English. That train of thought is backed up by another part of the translation here that reads that they had launched the TeslaBot in 2021. Obviously, that was just an unveiling as well. So it is maybe a little bit new information here. I think we knew kind of since the shareholder meeting that they were planning on showing off a prototype of something with that photo that we saw. But based on this essay, it does sound like Tesla is indeed planning on showing off a prototype. So we'll look forward to that. Remember AI Day on September 30th. All right, next up, we've got a report of a new sort of fleet order for Tesla vehicles, this time from a company called Autonomy, which already has about 1,000 vehicles. They are one of these companies that is offering a subscription rather than an outright purchase of a vehicle. So kind of similar to what we've talked about with an Uber structure. I think we talked about Shell partnering with a company to do this as well. Anyway, they are planning an order of 8,300 more Teslas, or an order amount of about $440 million. That makes up about a third of the overall vehicle purchase that Autonomy announced. So not quite the scale of the Hertz order, but still a big order nonetheless. All right, next we've got a pretty significant update on the Megapack. It looks like Tesla has updated the specs on the Megapack order page. Space S3X noticed this on Reddit, and comparing to the previous version, this is a much larger size Megapack. So it's longer by 6 feet or 27%, wider by a couple of inches, taller by 1 foot or 17%, and the weight has increased by 64%, while the energy capacity is now up to 3.9 megawatt hours, or about a 50% increase from the past version. So putting all of those specs together, you've got a very similar volumetric energy density, about a 50% increase for both, but you do have a little bit lower gravimetric energy density, 64% weight increase for a 50% increase in energy capacity. Although pricing does fluctuate a little bit based on the number of megapacks you're ordering, it looks like pricing has declined by about 15% per megawatt hour from the previous version. So putting all this together, it seems like these would now be lithium iron phosphate megapacks based on that lower price and the lower gravimetric energy density. That would also fit with a report that we had talked about earlier this year from Drive Tesla Canada, saying that there would be new megapacks, one of which would be called the Megapack 2 XL24, which would be 8.5 meters in width and would be using lithium iron phosphate cells. Now, this one is 9.1 meters in width, so a little bit different, but pretty close. So my guess is that this is what was reported on at that time. Hopefully, this is one of the early signs that we are close to seeing a huge uptick, combined with that Lathrop facility, of Megapack production. A couple of other battery updates here. First, Nikkei Asia is reporting that Panasonic is planning to be working with Tesla at Giga Nevada to increase the output by about 10%. And that seems to be a target that would be enabled through production efficiency rather than adding a production line or something like that. And they say that target is by 2024. So in terms of Tesla's overall battery needs, it's not going to be a huge needle mover, but we would still be talking about multiple gigawatt hours here, and that would amortize the cost of production over more cells, reducing their cost. We also got a battery announcement from CATL. They said on Friday that they are going to be building a $7.5 billion battery factory in Hungary with a planned output of 100 gigawatt hours eventually per year. They expect to begin production on this later this year and say that it should last no more than 64 months, which I assume is to get to that full capacity of 100 gigawatt hours. The other battery update we have is from Munro and Associates. They, of course, are continuing their teardown of the 4680 Model Y pack. Their latest video shows more of the nitty-gritty details from an engineering perspective of the structural pack. And then Sandy Munro also now seems to be talking a little bit about the cells, although we don't have an official report on this yet from anything on Munro's YouTube channel. He did say in an interview with Autoline that, quote, "This is less expensive, a lot less expensive than we thought. It's got a lot more power than we thought," end quote. And also added that the weight of the battery cell is about where we said it would be, but the canister is thinner than we thought. So some exciting rhetoric there, and I think the part about the canister walls is particularly exciting because the version that Jordan Giesecke had tested, he had talked about how thick the canister walls were on that. Maybe that formed Munro's expectations. The cell from the production vehicle that Munro has would have been produced significantly later than the cell that Jordan had. So hopefully that points to some significant improvements even during that short period of time. Hopefully Munro will do some more testing on that, and we'll see what they share publicly. Obviously they have their reports to sell too, but hopefully they'll share some of that data. All right, last quick thing for today is an update on a court case that Tesla has been fighting in Europe. They had to go to appeals for this, which was in regard to how Tesla is marketing their Autopilot and full self-driving features. The Court of Appeal did rule in Tesla's favor for the most part on this, so Tesla can still use the terms Autopilot and full self-driving to market their vehicles on their order pages. The only thing the court ruled against Tesla on was that they shouldn't be saying some feature would be coming by the end of the year in terms of software. For example, I believe there have been times when Tesla would say that city streets driving would be coming end of year or something like that. Understandably, now Tesla just using more generic language, which I think completely makes sense. All right, that is where we'll wrap it up for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Tuesday, August 16th episode of Tesla Daily. Thank you.